I'm going to go live in just a few minutes talking about performance review, the equity markets in Asia. All right. I'm going to talk about performance in the stock markets and in the markets in Asia just a little bit today as an interesting topic. So let's get on to it. First thing is, again, this is performance review of equity markets in Asia. So I actually started to pull together some of this data in the middle of January. Let's go through it a little bit and try to think about it. So first thing is that emerging markets in Asia Pacific, excluding Japan, were the best in 2020. Now, a reason for emerging markets optimism has been that important economies like China and Taiwan handled the COVID pandemic well and have seen a less negative impact. The vaccine news, stimulus, and stimulus expectations have driven stock markets further. Now, let's look at the markets for a moment and try to get a picture of kind of what's going on. Now, I'm going to show you a chart in just a second of the performance of the markets for 2020. Now, the purpose of this is not so much to look at immediately what's happening today. It's like, let's look at last year and see what we can think about. We can learn from last year to think about performance this year. So here is the chart that shows Korea, Taiwan, China, and India were the ones that did the best, and Thailand, Singapore, Indonesia, Philippines did the worst. So why do you think that was? Well, I mean, look at Korea. Korea as an example. Korea controlled the coronavirus very quickly with technology. Taiwan blocked people from coming in, and they only had a very tiny number of cases. Of course, China's massive, but they also didn't shut down their economy. They shut down Wuhan province for a little bit, but they were back up. And let's look then for a moment at fundamentals, valuation, momentum, and risk. These are the four things that I look at. If we look at Asia Pacific, we can see that ROE is below average at about 9 to 10.9% for ROE. On valuation, however, Asia Pacific it looks okay. It looks relatively attractive, particularly compared to the US. You can see 2021 PE of 16 versus the US at 23. Momentum, well, Asia has strong price momentum. And look at the EPS growth of Asia ex-Japan in 2020. It's 1.4% negative. It is the best performer of all, right? So let's dig into that just a little bit more. Let's look at the different markets or the different regions across the world. Now, this data is slightly different from the data in the prior table. So there's always some differences there. But if we look at this, these are all comparable against each other. The EPS growth for 2020 in the world was down about 15%. Emerging markets, 6.5 down. Developed markets is where most of the pain was. And in fact, you can see developed non-US, meaning Europe in particular, were where the real pain was. In other words, the US EPS growth was down only 10%. Now, that's partially because of all the infotech companies like Facebook and that type of thing that kept the US EPS higher. And if we didn't have that, we probably would have in the US looked like developed non-US. And then finally, look at emerging Asia, 5% positive. Of course, a lot of that is China. But let's take a look at emerging Asia for a moment. And this is actually all of Asia. And what you can see is that it was the Philippines, Singapore, Thailand, Hong Kong, Indonesia. These countries all got hit extremely hard. Now, Philippines has been really pretty much locked down. And you could say that Singapore, has also been, hit as well as Thailand. So a lot of pain there across Asia. North Asia has been much more resilient. And if we look at this, the point is the equity outlook for Asia for 2021 is that Asia's had a much more mild COVID-19 outbreaks. If you look at Thailand as an example, the COVID outbreaks were very, very mild. Now, Philippines had a little bit more of it, and they decided to have a very tough response. But now, the interesting thing is that if we look at the Southeast Asian countries, we've got, a pretty massive population of about 600 million people, and the average age is about 31 versus 38 in the US. So think about that for a moment to understand about Southeast Asia in particular. One of the things about Southeast Asia that's interesting is that it's not highly correlated. In fact, it's the least correlated to the US market of the equity regions around the world. So you could say that ASEAN if the US is crashing, ASEAN may crash less. That's the first thing. But you can also say there's a population of about 600 million people, and they're relatively young at about 31 years of age. So generally, I would say the underlying demographics are pretty strong. So let's wrap this up by saying that China's already seen a strong demand recovery, which is positive for the rest of Asia. And with the spat that China and America have had, it means that China's doing more trade with Asia. So I think this is a pretty strong driver of emerging markets. So let's wrap it up. What are the key points and the bottom line? Well, the key points is Asia successfully passed the crisis through better handling of the pandemic. Demand recovery in China should support emerging markets in Asia for 2021. And emerging Asia is strong. So the bottom line, increase equity allocation in emerging markets, especially emerging Asia. So those are some thoughts from some recent research that I'm doing. If you have questions or any comments along the way, feel free to put them in the chat, but also, also send it in and leave a comment. And then if I can address it, I'd be happy to look at any ideas that you may have. So you can send your questions here, which I just typed in to send out. So, all right. Well, I thank you for listening, and then let's see what we can come up with tomorrow. Have a great day.